Welcome back. RITES is the next company on our radar. The company has emerged as the L1 for tender floated by Tanzania Railways Corporation and another tender floated up by UP State Bridge Corporation in the recent times. To discuss more on their order book, we are now joined by Rahul Mittal, the Chairman and Managing Director at RITES. Thank you, Mr. Mittal, for joining us today. And it's been a while since we've spoken to you, so there's a lot to talk about as well. First up, there have been a lot of order wins by the company since June. Can you give us a sense of what the updated order book is? The last time it was around 6,355 crore rupees. And where is this coming from? You have various segments, consultancy, turnkey, leasing, exports. So where are we seeing most traction coming in?
Morning. Yes, you see, our core strength is that we have presence across all areas of infrastructure. So whether it is consultancy or, consultancy in design of export of rolling stock or consultancy in turnkey projects, our order book on 30th June was 6,350 crores. And even in the months subsequent to that, in the last 2 months, we have been either been declared L1 or getting orders across areas of infrastructure. So whether it's, as you said, the bridges, the inspection for bridges in UP, whether it's the export of DMU rolling stock L1 for Tanzania, whether it's a tunnel order for J&K or a bridge order for Sonnagar Andal. So or whether it's a leasing of locomotives order for Gujarat State Electricity Corporation. So across our areas of business, we've been getting orders. And the milestone that we achieved last Q3 of becoming a one order a day company, we are confident that in this year also we will continue to maintain that.
So you have been winning that one order a day so far in Q2 as well. And just if you can give us an updated number on the order book, what do you plan to end this year with in terms of order inflow and order book?
Yes, in fact, we achieved that milestone in Q3. We maintained that in Q4. And I'm sure averaged out over this year, we will be able to maintain that. The order book has been increasing over 6,350 crores at the end of 30th June. We will declare the final order book at the end of the quarter. But this much I can say, the Q4 to Q1 saw 11% jump in the order book from 5,700 crores to 6,350 crore. And the way we are getting orders, I think every quarter you would see a sequential increase in the order book, notwithstanding our efforts to improve our execution and increase our revenue. In spite of that, we would see a gradual increase in the order book.
Mr. Mittal, good morning. Thank you so much for joining in. How has business shaped up this quarter? Because you may have won orders almost every single day as a company, but has that translated in the previous orders that you have won, has that translated into the balance sheet as well? Because the first quarter, as I look at, was not a very impressive quarter because your revenues were down, your margins were down as well. Do you see a better performance from the company going forward in the subsequent quarters? And if you could also brief us on how the tendering activity has been across this quarter as well.
Yes, you're right. The two hits that we took because of the hit of the export revenue as well as the quality assurance business revenue, that was a hit which we were anticipating at the latter part and during the last year. And that's why our increased effort to get more and more orders across the spectrum of our business. And as these orders have been coming in the last few months and quarters, our effort will be to increase the execution and increase the revenue realization. And I'm sure as you see sequentially, not only will the revenue realization grow up, but also the order book will go up. And as far as the tendering is concerned, as I said, across sectors, both the domestic as well as our international, whether it's project consultancy or export of rolling stock, we are seeing a huge jump, and we are bidding across various geographies, both in the domestic area as well as in the international business.
Mentioned the hit you took with exports, Mr. Mittal, but your consultancy business, which is your core contributor to your top line, even that took a bit of a hit in the first quarter. Your revenues there were down 10% as well. Do you see that improving this quarter? Along with, has the situation on the exports front improved? And do you see quarter two being a far better quarter than what the first quarter was?
Yes, you see, the quality assurance revenue, which took a hit of about 35 crores YOY Q1, that is a part of the consultancy stream of revenue. So that itself was a hit of about 35 crores. And you're right, as we go forward, not only in our project consultancy, but also in our quality assurance business, where we have now a huge number of new client base. In fact, most recently, the PM Vishkarma Yojana, we are the nominated inspecting agency for the toolkits being supplied in that. So these new orders, whether it's the quality assurance business where we have a larger client base, or these export of rolling stock orders, where we got two orders after a gap of about 4 years, the Bangladesh and the Mozambique orders, these will definitely start generating and generating revenue, and you will see a sequential increase as you go down every quarter during the FY.
Okay, we take that point. So in that case, Mr. Mittal, can you give us a sense of what margins will look like with exports improving, with the quality inspection aspect getting away from the impacting the fundamentals as well? You did around 22% in quarter one. Do you end the year with similar margins or better? And how do margins differ in different segments? Is it higher for one and lower for the other?
You see, there's been a very big change in the entire dynamics of the business. If you see, even as you go quarter to quarter, within 1 year itself, the quantum of competitive orders that we are getting is hugely increasing. In fact, in quarter one itself, the competitive orders, the orders that we got on a competitive basis were about 70% plus, which is a huge jump from the previous year itself. So as you go more into the competitive arena, whether it is the domestic orders or the export orders, both these export orders were global tenders. Obviously, they take a hit on the margins. They're more competitive. So in terms of margins, the hit that you saw in quarter one, we feel that these are the levels which we will be able to sustain in these range moving forward. But yes, our effort would be, as I said, to sequentially increase the revenue and thus increase the absolute EBITDA and the absolute PAT going forward.
So you mean to say that this 21-22% would be the normal margins that you would like to maintain? Am I correct, Mr. Mittal?
Yes, for sure. As I said, a variation from quarter and quarter depending on the mix of the revenue, because we have 4 different streams of revenue. But to my mind, the kind of margins, whether it's the EBITDA margins or the PAT margins of about 17 odd, 18 odd %, which you've seen in quarter one, on an overall average basis, on an annual basis, to my mind, these are the levels which would be seen in the coming quarters and years, except, of course, variation from a specific quarter to quarter.
Okay, all right. We take that point, Mr. Mittal. Thank you so much for joining in today with all those details. So sequentially, things are looking better, and exports also are picking up for the company. Thank you for joining in. Time for a short break. We'll get you more on the markets on the other side. Stay tuned.